Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So BTC got a bit of a rejection off of some of this resistance slash little mini point of control region of this daily resistance zone at 43,977, and we got banged a little bit up to the downside. Is this sustainable? Are we going higher? What is in store as we trade between the 886 and the 786 of this diagonal pitch fan? I've had price in since January. Let's go ahead and take a look at high block capital to see the liquidity. What is high block? It is, will people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss? And we get to see where those crispy characters are, so let's do it now. So yesterday we were looking at a pool down here to be recalled, if you will, for the longs. We'll hold ourselves to the flame, but we were looking at this 43k even Steven region for that 50x $276 million pool, and they came back with a fury to gobble it up.
Fatality.
And then they immediately induced some shorts to the tune of 226 million up at 43,900, which they also V-shaped into.
Fatality.
Gotta pay yourselves at every step of the way. It's a good habit to have, to trim and put your shield up into profit so you win even if you lose. So do we go higher from here? Do we go lower? Where's the liquidity resting? Well, we have some up at 44,762 for the partners in crime that shorted into support there. So they could come sweep the highs one more time at 44,762. Let's go into the Binance chart where we had our predictions for yesterday and go see what happened. So we were talking about a rejection slash come down into this region. We had two areas of interest for the short. We had up here possibly recovering a fair value gap from this wick up here, and or getting a breaker block here and coming lower. We did not make it above this, so this was the area of interest we were talking about, and boom, to the target down below. We came back up and saw a retest region for possible continuation idea and or stopping out all the shorts in here. And yeah, let's go see what can be done. I'm going to remove that pool because it was recovered, so let's go ahead and remove this, remove that. We can move this down to the last line of defense there at 42,821 for a wick up there. We also have a high up in this region here at 44,489 ish, and this breaker block was one to write home about. We'll clear all this out and start fresh. It's all in the past. Okay, we'll leave that there to show you what that was on the momentum in a minute, but let's go ahead and add that pool up here. This is doing our own due diligence for the liquidity. A $226 million pool at 44,762. So we'll go ahead and do 44,762 here. So there is a little bit of liquidity up there to the tune of 226 million. Do they come and sweep that at one point or another? We haven't really seen a retrace into a level here. We came down to the equilibrium, the discount, slightly into discount range here off this wick. This is a wick over here that we came into and bounced off of. All right, so let's go ahead and expand our vision to the higher time frame pools. As it stands on the 1 minute time frame, you are imbalanced to long liquidity to the tune of $20 billion. Do we have more up above, down below? That's what we're here to find out. On the 7-day. Okay. So on the 7-day time frame, you do have some liquidity up in that 45.6 region that we could come up to and grab to clear this as we put in a higher high. So watch out for your shorts. We are still in bullish market structure. So let's be aware and take care. On the monthly time frame, you have some up here, double digits at that 44.7 and 44.6 region, $20 billion up here at 44.7. That also happens to coincide with that 1 minute pool they induced here at the support level that are currently either at break even or underwater if they are still open. And whoa, what am I doing? Sorry about that. And yeah, if we go to, so there is a slight imbalance to the upside here for the shorts that they could be curveball pitching to the upside here. This is Run for Profit Friday. We have one leg down, but we haven't seen a real true M pattern yet. If we look here on the 3-month, you have 15 billion at 44.8, 16 billion 45 even, 12 billion 45.2, 13 billion 45.4, 12 billion 45.6, and it starts to taper at 45.8. So nothing really beyond 45.8K. So they could be coming up to those regions at some point. You have little pools down here because we came and reclaimed all of that previously. So it'll take some time to percolate. The largest amount below 34K. Do we see a scam wick down to that at some point? I would be careful of your longs. You are longing into a premium if you do buy anything here. Just be aware of that. You should have been looking at our rocket ships on September 11th and or October 12th when we had another rocket on our indicator, which we'll go over in a minute. On the 2-year time frame, you have some double-digit pools at 44.8 and double-digit pools at 44.2, and it starts to taper beyond that point. So you got about $100 billion to grab if we continue to the upside here. These are some old trades from May 9th of the drop down, so they could still be on the chopping block. Be aware of that. So let's go shout out to the chat, see how everyone's doing, look at the monthly time frame, get our pools in order. What's up everyone? How's everyone doing? All right, so why is this curve here and what are we getting rejected against here? Well, that happens to do with the indicator suite that we use. Link in the description for more. momentummaster.info. Turning on that heads up display and scrolling down to features, you can toggle everything at your leisure. Toggle switches are there. That was Bitcoin's bottom. You can read about the trend cloud, the baselines, the stochastic array, and more. Dynamic alerts to your phone and whatnot. So let's go ahead and take a look what we were seeing yesterday. So yesterday we were talking about the hourly time frame cloud and possibly getting this shift in structure of the volumetric cloud here, better known as the trend cloud. And this is also why we are getting a rejection off of it, because it is still bearish in nature. We broke the hourly super trend, so now there is a bearish trend on the hourly time frame. This hourly super trend has held since December 1st and beyond. Actually, it started to wick around in there, but basically held since the breakout. All right, so let's do a fresh reset here, deleting these hits to the high, and now we can delete this hourly projection on the cloud and start to make our descent through the time frames. So the 3-day time frame closed, will be closing at the end of today. Today is Friday, December 8th, Run for Profit Friday, as they like to say. So this is where it will run towards the profit. Do we go up to go down and grab some of these pools below within this candle, or do we maintain this bullish structure some more? We have been banging our head against that 2 Fibonacci zone of the take profit region. If we look at the 3-day money flow and RSI are at even Steven levels, possibly coming up here on the KD lines of the stochastic, getting a little bit fatigued on the Williams here. We still have a large momentous upside play on the baseline, so not yet bearish on the 3-day. Bullish on the daily as well. We came up here, the angle of the cloud here on the baseline, sorry, the trend cloud is still pointed to 2 o'clock with no signs of abatement just yet. And yeah, looking at the oscillators for the daily, we are having the money flow beneath the RSI. This money flow could curve up and give a double top scenario up to that 44.7 pool with the money flow coming beneath the RSI. We see this over and over again. Let's just show you back here. For example, you had this disparity between the money flow coming beneath the RSI. You had some bullish divergence, and sure enough, boom, to the upside. So same thing over here. You're getting some money flow beneath the RSI. MACD still crossing up, starting to slightly come down, but could easily come up here in a manner, watching out for that Williams suppression on the daily. Now we are starting to fade off of one of the little baselines here. So seeing how this daily candle closes, does this turn into a rejection wick and come below this fat boy baseline? Then you'd be starting to get insinuations of that bearish structure, but it would all be, how does Friday close? Long story short, how does Friday close today? That will be the clue for how the weekend will trade, sideways or downside, or drifting to the upside. 22 hour starting to come down in a manner here with the cross down event of the Williams. Does the Williams see itself to fruition here? Previously we had the money flow beneath the RSI give us a burst up. We're starting to get the money flow beneath the RSI again, although the RSI has been holding. There are exceptions to the rule where the RSI does come down to the money flow, normally in a very momentous way. Going to the 12 hour also failing off of the double baseline, starting to get the insinuation of a cross. I would not be surprised if we come up to here, come down to here, and give this wick, which gives the cross down event of the 12-hour baselines here. Now, what are the baselines? You can read about them. They're your first sign of reversal. It's fractal in nature across all time frames. We had that inversion off the cloud here, and that cross up event with represented by the helix here had you at hello for upside. So the same thing could be said on the opposite side of the equation, which is why we watch for this clue first. Nothing is guaranteed. Starting to see the cross down of the Williams with an alarming effect here. Does the 12-hour give us downside at some point, downside suppression? Looking at the 6, let's go ahead and remove this. So far the 12-hour looks like it could be a heavy weight, even if it does burst up here, coming back down again. The 6-hour we were looking at yesterday with the cross down event, which is what gave us that clue for downside, and then we got it because this clue of the first sign of reversal being the baselines and the price being beneath the cross down event gave us that dead weight. So do we continue with this dead weight? We are oversold on the stochastic RSI. The Williams just getting started here. This could suppress it just like it did the hourly yesterday. So what do I mean by that? We'll get there in a moment. Going to the 4-hour. 4-hour also oversold on the stochastic, and money flow coming beneath the RSI, starting to curve ball. We had some bearish divergence crystals lock in here at the top and start to fade off of that. Williams starting to come down in a manner here. It could very well suppress the price. So far we are holding the cloud and the super trend. Super trend has gone a bit flat on the 4 hour. It's 2.5% away to negate that. Coming down to kiss that cloud could be something to think about. Remember, in this impulse we are in premium levels, so you should be thinking premium, sell at premium ideas, not buy at premium. So if it comes down to these levels here, then perhaps you could get a sweep, but not really interested in longs myself personally at this time. The long idea was down here. That's where we were looking at longs, and down here at the rocket ship on September 11th. So that was the long idea. Now we're taking the opposite side of the stance at a distribution phase. Are we starting to see some distribution? So looking at the cloud here on the 4 hour, the 4 hour cloud is starting to give a little bit of a sign here of slight weakness. We have to go ahead and make this accurate as can be. So do we see some sort of tapering of this 2 o'clock angle to 3 o'clock on the volumetric trend cloud or not? That is the question. If we go to the hourly here, the hourly is what we were seeing yesterday, seeing this possible fade. We have switched to that bearish trend based super trend. As of this moment in time on the hourly, you're getting some bullish divergence here as we start to make a way up here. Ambiguous on the Williams, could go either way. You're not at oversold or overbought. The leading MACD on the hourly starting to give a cross up event. No volume behind the move though just yet. Asia normally lacking volume. Something I've noticed with Asian session is if you get a pump in Asia, look for it to fade into London. So you could get some sort of fade play into London if we get a push up here. Very rare that they would have a huge pump there. It would be a very faded pump. And this you can see on some market sessions on lower time frames. If we go to the 15-minute, should bring it up here. Asian range, London, New York. This is one of those free indicators. You can take a look up here. It is ICT kill zones by Tradinator. It will put it on your chart for you like so. So that is that. And yeah, 15-minute, you had 3 time frames oversold. You're starting to see not so strong of a cloud shift. Now, what would we like to see? Well, if we look on Momentum Master, this is a fractal like nature. You'd be seeing the cloud come beneath the price action and the candles close above that thinning purple cloud. So if we start to see some price action closing above this cloud, we could be seeing something similar to this, where we come up into that range, to that pool up above. So if we just zoom everything out and just look at this alone, it could be a double bottom event that we are experiencing right now on the 15-minute. The 15-minute is overbought. You had a rising sun event start to come up on the Williams here. Does this continue into the hourly cascade or not? The hourly still at that 50 level, ambiguous. If we look at the money flow on the RSI, above the RSI, suggesting certain fatigue to come down perhaps on the hourly time frame. If we look at the 4 hours, still potentially getting that suppression. So we have possible suppression from the Williams on the 4 hour, possible suppression on the 6, although oversold on both. And going to the 12 hour also starting to come down in a subtle manner. So do you get that subtle suppression of the 12? The overall immediate imbalance, as we saw, was up in this region. So coming back to that 44.7-ish range is not strange to think to hit that high pool. At some point, they don't take everything, so nothing gets cleared forever. So to give you a case for bearishness and not coming up to that zone, if we just go to here, for example, in August, there was $203 billion down at 23.6, and guess what? They never touched it. They just left it alone. Protected positions much? So they had some protected positions that they left unscathed as they came up into this region on October 17th. So we were looking at possibly sweeping that 23.6 region at that time, which they never did. So would them leaving, $60 billion alone be strange to imagine? Not necessarily. So they don't clear a range entirely just because it's there. There are some positions that they reach a market objective on and they just reverse that. So even if we are seeing some imbalance to hit, that it is not guaranteed to go there, if that makes any sense. So even though we have an internal range liquidity of $20 billion to grab up to 44.7, and that lines up nicely, that doesn't necessarily mean it will go there. All right, so first things first, you trade with the cloud. So if you cannot get candles above to close above this cloud, then there is a moot point. You have to get some candles closing above this cloud and a conviction above it, like this, with the cloud pointed to 2 o'clock, which we are not yet at. So we would have to see this surge up to that pool and break this range over here. This was a bearish order block breaker, whatever people want to call it. It's just resistance, okay? Don't need to overcomplicate anything. All right, so there's some possible resistance up here because you have a lot of consolidation to the left, and then you have those pools of liquidity up above, high over here at 44.489. And yeah, watching out for that possible suppression. So if we go to the 4 hour cloud, this cross down event of the baselines has me concerned, as does the 6 hour cross down event. And once again, we talked about the 12 hour possible fatigue. If this comes down in an aggressive manner, you will have yourselves a double top for a juicy short to come down into all these pools below. All right, I'm willing to take a look at some other coins real briefly, and then I must bid you adieu. I have to go into work earlier today. It is Friday, so I'm willing to look at whatever you want me to. What is it that you are interested in? Please let me know. So we're looking at the potential of coming up to that 44.7 region to put in a new high. Does it happen or not? And then watching for a potential swift rejection, because it is Run for Profit Friday, to sweep down into some pools below. It would be nice to come all the way down to 40K. That would be cool. And you have one, and that would be 2 hits to the high, then they come up, make a third, and then drop it even harder. Who knows? All right, let's go take a look at the things here. So let's see. Trend trading tribe. Low closes on the point of control close. Supply and demand, man. Yep, exactly. Supply and demand. So you could do a fixed range volume profile here of this range, And yeah, it's this point of control of this local range. Just average, ideas about support and resistance. A lot of these things, they just overcomplicate. Like ICT terminology for 2022 is now consequent encroachment. And it's like, what the hell does that even mean? Why don't you just say equilibrium? The equilibrium of a fair value gap. Why overcomplicate the terminology to sound more intelligent? Just doesn't make sense to me. But anyway, I follow all schools of thought. I don't negate any of them. I incorporate. So momentum is a pillar, as you can see here. 3 time frames oversold, it started to find support. 4 time frames overbought, started to reject. So there is something to be said of momentum too. So there's the 3 pillars: liquidity, math, and momentum. Those are the 3 pillars of trading, in my humble opinion. Of course, they create structure, and structure is within that. But structure and patterns, all these things are tertiary to those 3 things. All right, great show. Have a good day. Work on any thoughts on Polygon, please. Sure. I'll look at Gamble. Is that Gamble? GMBL. I'll look at that and Polygon Matic, and then I will bid you adieu. First, I want to look at what happened to AVAX yesterday. I was put out like a little thing for AVAX. I was talking about possibly coming up into a region. So it did come to the 1618, and we were talking about coming up to the 1382. Where were we? We were talking about it coming down to one of these levels. It came and got an order block off of one of these fib levels that we were talking about, and then talking about coming into some deviation above. We were looking at some, yeah, so that was a good entry model for that 786 bounce. So it came to that 786 and then basically went up to the 1618 for 10%. And that cloud kiss idea still holding strong. You could have re-entered off the cloud kiss. Boom. Let's go ahead and look at Matic. So Matic on Sunday had a little bit of a scare sell-off at the trapdoor 706. We said watch out for the 706 trapdoor. I call it a trapdoor. And eventually we came back into these gaps over here. Let's go ahead and clean up the chart a little bit and start fresh. Okay. So first, we turn off the Momentum Master while we're doing all the fibs. It's a little bit too much to handle in the beginning, so we're just going to turn off all of this and start fresh. So there were some fair value gaps that we were looking at attaining over here, and we did after a little bit of manipulation on Sunday, coming back down into a consequent encroachment fair value gap, basically the equilibrium of this candle over here. See, wow, it's equilibrium. But yeah, you could also just say it's support from over here, daily support. So it came back to daily support, bounced off into a fair value gap over here that we were talking about for Matic. Let's go ahead and see the liquidity for that real quick. Let's go ahead and load Matic up here. We can get this for you guys. It's $90 a month, and we get it to you free every day. So that alone should provide you some value right off the bat. So you got let's turn it to max liquidity to see what it's maxed out at. So we grabbed a bunch of liquidity of shorts, giving the shorts a bit of a squeeze. Overall, you have imbalance to the tune of $275 million in long liquidity. At some point, if you sweep up all these shorts in this last burst up to 86 cents or so, you could be coming down to grab some of these longs. Let's go ahead and take a look. That was the fair value gap recovery idea, so we can delete this, clean that up a bit, and turn back on the momentum. But first, all right, what can we do? We're going to take a trend-based fib and just say, since November 14th, we retraced down to here, and now we're coming up to here. So where would I be convinced of a short? Well, we came up to a point here. So levels to watch if we do retrace back down again would be down in these regions. And this also coincides with some of the liquidity over here. Some daily time frame, fair value gaps, whatever you want to call it, bullish order blocks, whatever. You got some wicks over here. So you got some interest down in this discount range. This is the equilibrium for that. So if we come down into a deep retrace region, this would be where I would be interested in repositioning in a long formatic. Right now we are at premium levels, so we should retrace down into here in the coming days, at least, if we are going to make a healthy move up. I would like to see a retrace, a sweep, a solid sweep of the liquidity, and then we can deviate up to here for reals. Oops. But that's just on the higher time frame analysis. Let's go into the lower. So as it stands right now, you are holding the adaptive. So we can remove this real quick. That's in the moment. We'll come back to it. So we're holding the cloud and the adaptive baseline. What does that mean? Well, you can read about it again here, adaptive MA and the baseline, or sorry, trend cloud. So we're holding that here on the daily time frame with the cross up of the baselines here, suggesting that we come up a little bit higher. We have some first line of defense zones here up at 8848. Does that line up with the liquidity? 8848 doesn't give me a map here, so I have to go to a higher time frame pool for Matic. Let's do that. What? Okay, Matic. So we're going to go to the higher time frame pool because it's one of the more well-known coins. They'll give you higher time frame projections, which is nice. Booyah. So if we go to that, 86 starts to taper at 88. Let's go to the 3-month. So we do have some thick liquidity bands up in that 87, 277, 89 is where it starts to clear. You got 809 million. I know that's distorted due to leverage, but it says $809 million to grab up to the 89,257. 89,257. Yeah, that would put you right about in the middle of this candle. So if you do wick up into this region here at 8848, that would be an interesting point. We already recovered this gap of this range, so now coming up into this wick here possibly could be the draw. We recovered the gap. Let's go look at the baselines, or the oscillator. So we had the rising sun event on the Williams starting to come up in a manner here. It could suppress this overbought status for some time if it wants to continue higher, as it did here on this leg up from October. If we make our way lower, we can see on the 12-hour we are starting to get overbought, and this coming up in a manner here. If we look at the curvature of the 12-hour cloud, suggestive of continuation ideas. So at some point coming up a bit higher here on the cloud, by the looks of it, this was what this angle was. We were seeing this 12-hour cloud shift and come down here before it happened. and this rejection off the cloud. Conversely, we could be coming to kiss that cloud and continue higher in a manner like this. We're going to go into a lower time frame. There's a lot of sell-off wicks as people are taking their profits up into resistance here. Does that mean we go higher or not? Let's go into a lower time frame. Immediately on the daily, I was seeing the drawdown to this point, so I'm just sculpting a narrative. On the 6 hour cloud, we got that nice cloud in kiss here on Friday, December 1st, last week. That would have been a perfect entry as we closed above the cloud. And this is what we talk about. Like if I zoom into this on the 6 hour, what do you see? You see the exact same thing, a double bottom event closing above the 6 hour, boom. And so it's a little bit late to the party to long here. This would have been a smoother, higher probability setup. And this is why this schematic holds true for all assets in actuality. So if we go to the 4 hour, the 4 hour is, pardon me, 4 hour is getting at ambiguous levels, could go either way, hard to read at this time, but the cloud is holding and the super trend has flipped and to bullish, and we are also above the adaptive. On the 4 hour, 4 hours still has legs potentially to the upside. Seeing a lot of profit taking as we go higher here, and a lot of fatigue on 5 time frames as per the 5s and the 6s here. I don't like longing in 5s and 6s. I look at short ideas in that idea personally. When I see 5s and 6s, I see kind of fatigue on the horizon. We did come up into a fair value gap here that we outlined already. Next targets are on this chopping block with the liquidity and some gaps up in here. Basically 89 cents. There's some shorts up in that region. And looking at the lower time frame, as you get less liquidity, it gets more wonky on the oscillators and harder to read. Doesn't mean you can't scalp it. There are people who do. I'm not one of them. I don't have the time to sit there, but you could play these little 2 oversold bounces up here. Not really a clean cloud conversion here. I'd prefer to see this purple shift to blue. This is my style entry. That's why it's this schematic here. I'd be looking for stuff down here in this region from Wednesday. Where do we go from here? Well, I think we outlined the time frames quite nicely on the 4 hour. 4 hour possibly has legs. You're getting a lot of sell-off wicks into the range here. If we wick up into this region, that would be a juicy short opportunity inside of here, perhaps. So if we see some sort of sell-off at that point, I would not be surprised if we come into a retracement here. Even looking at the basic pocket, this does coincide with the golden pocket zone, so it could come into this golden pocket region and reject. So coming up to here, coming up to here, perhaps drifting on some liquidity, grabbing those shorts, and then possibly making its way on down. We'll see how it reacts off of that 618 of this impulse to the downside. You have a lot of resistance to hold. This adaptive and the 79 cent region will act as a potential support level. If not, you're coming to these deviations below the 786 and the 1 level down here. also some deep retracement zones. And that is a nice analysis of Matic. If we go ahead and just go back to some levels here, we'll turn off the oscillators to make it clean for you, like so. So watching for it to drift up into the liquidity up here, and what does it react off of? This is Run for Profit Friday, so I would not be surprised to see some huge sell-off at some point soon, and then make a ABC to the downside. And that is my story, and I'm sticking to it for Matic. Let's go ahead back to BTC and see if you have anything else for a last one. I really got to get going though, so I think that will be it for me actually. Inconsequent. Thanks, man. All right, well, I gotta bid you guys adieu. So once again, you could look for this cloud shift on Bitcoin. I'm not extremely bullish. If anything, I would say watching for a scam wick sell-off to a downside event, but who knows? We could be bursting up here at the seams on this 15-minute. I would be looking for, this is the Asian range though. The Asian range is pretty dead, so it could chop around until London, and London sends it up to there. But either way, that is my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the